Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
So you've probably heard about a company in China called Evergrande that's making quite a stir in financial markets these days. In this segment, I'd like to tell you a little bit about that company, why it's in the news, and what impact it actually may have on financial markets. Some in the media actually have called Evergrande China's Lehman Brothers moment, if you will. And that's in reference to that company's failure that precipitated the financial crisis of 2008 here in the United States that reverberated around global markets. Those that actually think it because Evergrande poses a systemic risk to Chinese financial markets, much like a domino effect and possibly even a global event. Certainly, Evergrande has the scale to bring attention to its problems. It happens to be, after all, China's largest property developer, has liabilities of over $300 billion and 200,000 employees. Just to put that in perspective, at Washington Mutual, it turned out in 2008, it was the largest bank failure in U.S. history at $306 billion. So this is a very large company that we're talking about in China that's causing all sorts of discussion and reaction. The company happens to be highly leveraged, has lots of debt relative to its assets, and recently has experienced some significant strains on its cash flows. It basically got into trouble in financing an aggressive growth strategy that became riskier over time. And China's residential property market is starting to cool off, and that's further reducing demand for their properties. Recently, what rattled financial markets were questions whether it would be able to make its scheduled debt payments to investors. Now, it's negotiated a settlement on one of those payments, and it's trying to raise cash from the sale of other assets, including a bank that it actually has an interest in China. There's actually some concern about whether China would intervene and prop up Evergrande should it fail. All of these events have actually caused the stock to drop by as much as 85%, and credit rating agencies have downgraded the company to a probable default. So it's got some adverse momentum building against it these days. We think, though, that their central bank will probably take measured steps to actually do something to intervene and prop them up. It's even taken some steps in the interim to provide liquidity into the financial system over in China, as well as announcing its commitment to ensuring a healthy and robust real estate market there. So the issue really comes down to what's next in this saga. It feels much like 2008 in some respects, that there's a very large, almost too big to fail firm that could severely disrupt real estate markets in a large country and pose risk to the financial system. However, I think the likelihood of there being another 2008 style Lehman Brothers moment here is just simply not likely to happen. I think China is likely to take action to blunt a market collapse that's if and when Evergrande happens to fail. Preserving the growth engine of China is an absolute must for the government, even though it may be costly for them to mitigate any adverse effects from any collapse of Evergrande. So in the meantime, I expect it to remain a wild card of sorts that will just add to the mounting instabilities that we see today in global markets and in U.S. markets as well, but will actually not precipitate a recession in China, nor create any worldwide panic in the end. Since the last time I was on talking about the problems that Evergrande, the large property developer in China, was having, there have been a couple of new wrinkles or developments on the scene. Most recently, actually, we learned that Evergrande actually was looking to sell a majority share of the property development arm of that company to another large property developer over in China, Hopson, which halted trading, but they wanted to halt trading on the stock exchange for both of those companies while this deal was going through. That would actually get a much-needed cash infusion back over to Evergrande to be able to continue to meet its bond payments to various investors. But in the meantime, there's other developments that are kind of worth just kind of bringing into the picture here. You have to keep in mind that residential real estate in China accounts for about 10% of their GDP. You compare that to 4% over here in the United States, and so that's very significant. And so we're starting to see a lot of pressure and a lot of problems emerge on other property developers over in China. Just happens that Evergrande is huge, so it gets the most notice. But other developers are coming under pressure as well. We've seen their stock prices go down significantly. We've seen, again, credit ratings deteriorate for a number of those companies. We've seen homeowners who put deposits on properties that they were trying to get into and now they can't, starting to have concerns about that, and construction workers that are also unable to get paid for some of the work that they've been doing associated with the Evergrande projects and whatnot, is causing a lot of pressure on China to step up and try and manage this from getting out of control. And they're doing that. They're asking banks to step in. The regulatory arm of China is actually asking banks to step in and ensure sort of an orderly process in making sure that liquidity stays there in this very important segment of the market. So I think we have to stay tuned. Much like any other of these events that happen from time to time, they're quickly unfolding. And so we'll have more updates for you as they come about, and hope to see you soon.